Thanks for tuning in again on today's vlog. I'm so excited that you could join. We're going to be discussing businesses and how immigrants need to begin to look towards having their own business here in Canada. If you are an incorporation, if you are a sole proprietor, or even in partnership, the implication it has on your taxes, how you can navigate all of this and begin to also get money back from the government as a business owner. We're going to be talking about all of this and many more, so stick around and don't go anywhere. Recently, I received an email from the Ministry of Finance through the Saskatchewan e-tax requesting that it was time for me to file my PST as a business owner. So are you a business owner here in Canada? Are you incorporated? Are you a sole proprietor? Or are you in partnership? So I'm going to be sharing a few things as it benefits you as immigrants and what you need to know, especially as regards you filing your tax, irrespective of the kind of business that you run here in Canada. And I'm excited that just recently a couple of people have approached me asking a few details about business setup, businesses, what the implications are on taxes. And this gladdens my heart actually, that people, immigrants, are really looking towards owning a business, starting off a business, and being able to leverage their tax deductions on the income that they receive even as a business, and being able to also gain more, and how you can be able to net off some of these taxes off your personal expenses and keep some more money in your pocket. For the purpose of this video, and if you have not watched an old video that I posted regarding setting up a business, I specifically spoke about incorporation because that's the business that I have, and how to set it up, step-by-step guide. And I showed you even from my computer how I was able to open some accounts to be able to set this up. So if you have not watched that, it will do you well to go watch that video and come back to this video so that you can better understand some of the things that I'm going to be saying here today. I remember in that video I spoke about opening an ISC account, that's the corporate registry account, for you to be able to file your e-tax. And this tax is actually vary based on the size of your income in an annual basis. So if you earn less than $4,800 in a year, then you can file your tax only once a year, that is annually. And if you earn about $4,800 to $12,800, then you are meant to be filing your PST quarterly. Anything over $12,000, you need to file monthly. And there are penalties if you don't file at those specific milestones in your business. Right, so let's talk about sole proprietorship. Most individuals actually start to have some kind of income or businesses that you do on the side even while you're still employed. And as an immigrant or anybody at that, not even for immigrants alone, if you have a business that you earn an income from, then you're probably a sole proprietor. You do not necessarily have to incorporate or register that business if the business is actually in your name. But if you have a name, a trade name for that business, then you need to register that business for accountability's sake. But if the business is actually run in your name, you earn in your name, they pay into your account in your name, then you do not need to open a business account for that name, or you don't need to even go register for that business name. And you can always file your tax based on this personal income, because it's like an extra income that comes in to you as a freelancer or a makeup artist, or you're just a hairdresser, or any other business at that you make a side income from. So let's talk about the pros and cons of having a sole proprietorship or owning a side gig as a business. You're solely responsible whether you're registered or not. If you register as a trade name or personally, you're solely responsible for the liabilities of the business. And if you make any losses, it's on you, on your personal income, on you, even on your business, on your property, on everything that is on you. So all the liabilities fall on you as an individual. And when it comes to the tax filing period, when you have to file your personal income tax, then you are also able to file this along with your personal taxes. If you were also employed in an organization and you also have this as a side income, then you'll be able to file those taxes alongside that filing period. As an individual that runs a personal business, your income tax or your taxable income will be your business earnings before tax. So that's what you report during your tax season when you file your tax. And as an individual, your income taxes are actually taxed on a personal tax rate, like you're working personally. Even though you have that side income, it is taxed on a personal tax rate. Business tax rates are actually different from personal tax rates, and we're going to be talking about that also shortly. So if you're thinking of registering a sole proprietorship business, you can do that in a trade name. If you're earning actually over 30,000 on an annual basis, then you need to register in a trade name, not in a personal name. Or your personal name can actually be your trade name, but it has to be registered. So that's for a sole proprietorship, really. You also require a business number if you're earning more than 30,000 on an annual basis. So two things: you have to register a business name if you're earning up to 30,000 annually, and if you're earning more than that, you have to register a business number, meaning your business is getting money, so you need to register for a business number. And you know, the process initially, when it comes to whether you're registering for a sole proprietorship or a partnership or a corporation, you have to do a name search. You have to search if the name is available for you to pick before you register. And there's a fee attached to that as well. So you have to go watch that other video I mentioned. You'll find it there. I spoke about it. And you can also, you pay the fees. You pay for the name search. You pay for the business name if you're picking a business name, and then you register for that business. And of course, you pay annually for filing your taxes. And for incorporation, of course, when you're filing your tax annually, you will be paying a fee. But for your PST under the set account, you probably just remit your PST that you charge to your client, or you net it off. There's always a way to net it off if you have actually purchased goods and services that you were charged PST. You net it off before you remit the difference. As a sole proprietorship, you really don't pay yourself. You don't earn a salary. The profits from whatever you make is all yours. So you don't really have to separate an account that you say, this is me paying myself. You can if you want to, but typically, since you are the owner, you are the everything, all the money comes to you. You can decide how you run that account. So it can be all turned back into the business. You can decide to portion some for you as you paying yourself. But you know, you manage all your expenses, everything. When you net off your expenses from your income, then whatever is left is either turned back into the business, or you eat it all if you want, and that's you paying yourself. But typically, there's really no rule that says a sole proprietor should be paid a salary. because it's not a corporate entity. Your net income is actually calculated from your personal tax returns when all your other expenses or deductions have been factored in when you're filing your taxes. Canada tax laws actually recognizes sole proprietorship as, or the income that comes in, as an income source for the owner, and so it must be reported as part of your income sources on another column when you're filing your taxes. That's on your personal income tax when you're filing your taxes, and typically those kind of incomes are recorded as a T1 income tax, but if you're an incorporation, it will be a T2 return. So let's actually talk about what you can claim as a business owner, whether personal, incorporation, or partnership, in your tax when you file your taxes. I know a lot of people, talk about it. I also tell people when you open a business, it helps you, to pay less taxes. But this also differs from business to business. The tax returns, or the tax that is charged for the personal income taxes for sole proprietorship, is actually more than for a corporation. So you pay less tax if you are a corporation, and you'll be able to deduct, whatever you're deducting as per expenses from your business. So let's talk about that briefly. As a business owner, you can actually make claims on your expenses. If you have expended some things, you can claim them back during your tax season when you're filing your taxes. And typically, it cuts across all the businesses, whether you're a sole proprietorship or in partnership or in corporation or other kind of businesses. You can actually make those claims back, but they are meant to be reasonable and proportional claims, not like everything can be taken back into from whatever expenses you've incurred that you want to claim it back. That is not how it works, but it must be proportional to the business and whatever expenses that you have incurred. You can claim back whatever expenses your business have used indirectly for the business. You can claim them back, but not in general terms. So there has to be reasonable expenses and in proportions as well. And this cuts across all the business categories, whether in sole proprietorship, in partnership, in corporation, and some other ones that I'm not talking about. I'm just only focusing on these three business types. So you can actually claim those, whether you have paid some taxes, or you paid some licensing fees, or even some other office expenses. These are the things that people really talk a lot about. Or you work from home, or you have a home office, you pay your utilities, you can claim back a portion of that. Usually the way it's calculated is the size of your home, whether if for instance you're on a 1900 square foot and you use a 300 square meter space for your office space. So what that portion would generate, looking at it across the entire bill of your utilities, whether you're heating, your gas, you will be able to claim that back, even with rent, or even when you're paying for your mortgage, for instance. You can claim a portion of it back as your own rent for that space. That will be looked at in a percentage basis. So it could be like a 20% of the whole space, for instance, and then 20% of the cost of your rent or your mortgage interest, or if you're paying insurance on your home, or you're paying property taxes, all those other expenses, whether your phone, sometimes you drive to the places that you're going to. It's a proportion of the entire sum. It doesn't mean you get 100% of what you have expended in that space, but it's a proportion of what you have used. If your rent is 1,300 and the percentage of your space, when they've looked at it in proportion to the 1,900 square feet, is, for instance, 20%, then the 20% of the amount will be calculated as what you will be refunded back during your tax filing. So if you need more details about what to claim, you can actually go to your CRA account under the business use of home expense, and you will see the categories of those expenses that you can claim back from the expenses that you've incurred in your home office for your business. Okay, so this, like I said, cuts across all of those other business types, so I won't be mentioning that, but it's just for you to note. But I'll just move quickly to talk about a few things, even about taxes, as regards the partnership businesses. Now let's talk about partnership business, running a partnership here in Canada. You know, it's kind of similar to a sole proprietorship, but instead of one person running the whole show, there are two people. But you must be careful running a partnership with an individual. It must be somebody that you trust, somebody that you know, somebody that you can put money together with, someone that you probably won't raise an alarm or question how money is spent, because if they spend it, you have also spent it. If they incur an expense, you have also incurred an expense. That's what is called a partnership. Like, it's like a marriage. So you have gone into marriage agreement with this person, and you must bear in mind that whatever that person does affects you, whether his expenses in the business or the losses he incurs knowingly or unknowingly in the business is also on you. It means that you are also in agreement. So you must be aware whoever you're going in partnership with, and understand that, of course, when there's profits, you guys have to splurge together. It is for the benefit of the two of you and the business. This is very important, so that you don't go into partnership with somebody and then you don't trust the person embezzles the money, or the person begins to do something else that you're not in agreement with. So just bear this in mind. So for instance, in this agreement, you must agree, you know, how your expenses are run, how your profits are shared, and basic terms and conditions. Really, you must have an agreement. That's the purpose of a contract and in partnership, so that there's really no, you know, you say I didn't say, you mean I didn't mean, is documented and both of you have signed. If you decide to register for a partnership, you can register in a province, for instance in Saskatchewan, or you can decide to go federal. But you need to have a business name. You have to register for a business number, and then if you actually earn above 30,000, you have to, by obligation, begin to charge for your HST GST from your client, which you have to remit to the government. For a partnership as well, you both of you can actually decide to register, whether in your local province, for instance in Saskatchewan, or federally if you want to transact your business beyond your local terrain. If you reside in Saskatchewan and you want to also meet the needs of those that are outside of Saskatchewan, you must register federally, and you must get a business number for your, you know, partnership, incorporation, whatever you call it. You must get a business number, and this is how you begin to transact business. And you know, this business number actually ties you to your taxes. It ties you to, it's actually different from your incorporation number, because this business number ties you to when you want to remit taxes, you know, the number that you give. This business number actually ties you to your account or your incorporation or your partnership business. And if you want to be transacting with the government, this number is actually what you will be provided. If you're also earning, like I mentioned in sole proprietorship, but this time around in the partnership or even in corporation, if you're earning above 30,000, you need to register for your GST HST account. With your GST and HST account opened through the SEC account, that's the Saskatchewan e-tax services, you'll be able to remit your VAT, that's your PST taxes, and from that portal you can pay your taxes, you can file your taxes from there. There's so many things you can do from that portal, so you have to open that account. That's how you have to open it. Other ways as well is also to send the form. You have to have the account actually, but you can actually fill out your tax form. They will send it to you, and that was the email I mentioned initially that I received. Then you can post it if that works, good for you. So you can post that as well, and that way you are remitting your taxes. If you have any PSC to remit, you write a check and you post it to the Ministry of Finance. As a partner in a partnership business, you are individually taxed from the income that you receive from that partnership. So the partnership company or the business itself is not taxed. So you get a share from it, your other partner receives another share. You're individually taxed separately from the business. If either of the partners actually have their homes that they use for the business claims for home expense will also suffice in that particular scenario when filing your taxes. So those expenses, like whatever you're using in the proportion of the office space, will be accountable for, and that's what will be taken off whatever expenses that you have, whether you're paying your rent or you're paying your mortgage or you're paying your property tax or utilities, basically for that accommodation. The proportion or the percentage of it vis-a-vis the entire square foot of the building will be what will suffice. And now let's talk about legal matters. Just a phrase really. I'm not a legal person, but know that when you're in partnership, you guys are liable for all the assets and the liabilities of the business. For instance, if the business is sued for one reason or the other, each partner's personal belongings or assets can be seized for the business, which will be taken up to be able to settle the claim for which the business is sued. So you also must understand all these fine lines when you are going into partnership with somebody, so you know that all your personal belongings is sold already in case you get sued or the company gets sued. So I know that is not a good pill to swallow, but if in case you also want to now live your personal life away from the business so that it doesn't affect your own personal assets and liabilities, then you have to move the business from being a partnership into being an incorporation, so that it is a totally distinct entity from you as the owners or the shareholders of the business. So whatever happens to the business will take care of itself, and then you as an individual, you are fine. So also transiting into corporation also means that, when you move into corporation, there's so much benefit also for corporation because the taxes are low, like I said, and you are also able to borrow money for your business from other financial institutions at a very low rate than you working there as fluky. They won't give me money. But as a corporation, I can go in for my business and, request for a loan, showing all my, of course, financials and indicators to show that I need this loan. They would determine if they can give me the X amount that I'm actually requiring or asking for. But the most important thing is, for corporations, there are always better opportunities to borrow money from financial institutions. And as you begin to grow as an incorporation, you can decide to start selling shares. Or you can actually keep some money aside to defer your personal income taxes. And that's another way that most people reduce their taxes and then save more money rather than give all the money to the government. Bottom line, if you are opening a sole proprietorship or you are opening a partnership, know that you are liable as an individual. All your assets, all your liabilities, everything goes. Your personal life, every asset that you have, even personally, goes to settle debts when the business is in debt, is in any kind of debt. So you must understand that if the business incurs any losses, you are liable as an individual because you are in that business as a partnership and as a sole proprietor. But this is different for corporation. So shall we talk about corporation? So for incorporation, you can actually create ownership shares. You have a structure, you have directors, there's a structure really in the organization, and this is totally different from you as an individual. So like those other two business model, you can be distant by law from your incorporation. So whatever happens to your business as an incorporation, nothing do you. You are fine. I know you are not fine because the company is not doing well, but it doesn't affect your personal assets. It doesn't affect you in any way personally, or you losing your personal belongings, or losing your savings, or losing any part of your own assets because the company is sued or is in debt. So this is basically the difference. All the tax savings still apply. If you're running from home, even as an incorporation like I'm still running my business from home, so I get to claim proportion of my home office space from the entire expense that runs within the home, which is also very good. There's a structure, there's a shareholder ownership, and all those other things are put in place, which helps your business as an incorporation. Here in Saskatchewan, you have to file your annual business returns with Saskatchewan Corporate Registry, ISC. This is a yearly thing. So if you are federally incorporated, then there's another way in which you can do it, because it's not only for Saskatchewan. So you need to dig into that and be able to find that out. But you need to be able to file that one every year. That's going to be at the turn of your incorporation year, which is every year. And for PST, it depends on your annual income. If you are below 4,800, you are doing that annually. If you are between 4,800 and 12,000, you are doing that quarterly. And if you are above 12,000, you are going to be filing every month. And that's the remittance of the PST, the HST GST remittances that you receive from your customers when you render any kind of service or sell any goods to them. And for Saskatchewan, that PST is the Saskatchewan e-tax services, so you can open an account with them. For your annual returns, you will be paying for that when you're filing your annual tax returns. But for your PST, you're only remitting for whatever taxes that you've taken from your clients. So if you don't have anything to remit, you only just file a nil tax. You must file tax every year. You must. It's a must too. Otherwise, government will think you are running away with the money you collected. So file nil tax. Put 00000. At least it's in account as a new business that you probably haven't made money, or you are not even eligible to charge PST yet. So let them know that you have not charged though. And that's why you're filing a nil tax, which you put 000 in the form and submit it. That's always very good. If you're still thinking of opening a business here in Canada, I think now is the time. Look at the hobbies that you have, check whatever thing that you're doing on the side and you're getting some small money. Please let that help you reduce taxes. Let that help you to be able to also launch into bigger business opportunities, and let that help you with your tax filing, and also help you to leverage more on getting bigger or growing in your business. I hope I have been able to give you an overview of the 3 different kind of business models that you can have. Either one works. There are risks attached to either businesses, so just start. You can start only you as a sole proprietor, and then you can begin to move into corporation as you begin to grow and you want shareholders on your incorporation. So if this has helped you, please give it a thumbs up, like and subscribe if you're new to this channel, and we'll be bringing more of this your way. Thanks, and catch you in another video. Bye.